Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. Well, after months of waiting for economic data to confirm cooling inflation, markets are expecting a September interest rate cut. But the question is for investors, how much of a cut will the Federal Reserve announce? Joining me to discuss is IBD news editor and economy expert Ed Carson. Hey, Ed, thanks so much for talking.
Hey, thank you very much for having me.
Absolutely. So rate cuts are coming. What's the outlook for the September Fed meeting?
The markets are expecting definitely a rate cut. Right now, the markets are leaning toward a quarter point cut at this meeting. There's a chance of a 50 basis point cut. It's sort of wavering back and forth. Still some economic reports between now and a meeting, but that's what people. I think the markets want a little bit more, but they'll take what they can get.
Yeah. And what will the implications be for investors?
Look, I mean, cheaper money is always it's a positive thing for the economy. It's also discounting. Typically people will discount future growth or future maybe future earnings by the discount rate. And if rates are lower, makes it so the current future earnings look better today. So those high growth stocks will often get a boost by lower interest rates.
Mm-hmm. And how will this interest rate decision impact industry groups and sectors from home builders to technology stocks?
Home builders definitely should get a boost from this. A lot of cyclical names that are very tied to the growth of the economy. And again, the high beta names, it may not help the growth companies as much, but it may help those growth stocks that have those high multiples and people are expecting strong growth down the road. But again, they have to keep this is the other side. This is all things being equal. These rate cuts are coming in part not just because inflation is cooling, but because the economy is slowing. So that's one reason why the Fed is doing it. So this may help, but it's also as other things are sort of weighing on some of these sectors as well. So it's not necessarily you're going to see positive reaction. It just may minimize the negative trends.
Now, how did the latest economic data affect this decision?
Well, inflation sort of set the stage. Inflation has cooled off a fair amount over the last few months. So that sort of like made the Fed willing to do that. And now in the last few weeks, we're seeing economic data look weak. Now the shift has gone from is inflation too hot to is the inflation too cool, with a lot of indicators falling to multi-year lows on job growth and whatnot. So now they're worried that. So that's becoming more like the Fed can raise rates to the fact that the Fed has to cut rates. So it's a different dynamic that's been going on.
Let's go back to how much the central bank is expected to cut those interest rates. A 50-point cut would be more aggressive than a 25-point cut. Is it better for the market and the economy to get a bigger cut to start out with? Or does it signal the Fed is behind the curve in taking action to avoid a recession?
Yeah, I mean, that's a good question. I mean, look, the market's always wanting it's sort of like, your kids want candy. It's just like, could I have two cookies instead of one? Sure, they're going to want that. I sometimes be more gradual, making sure you don't go too swing back and forth, and just that consistency. The Fed likes to be consistent, that hey, this is what's going to happen. That in itself is nice. If you can reduce that uncertainty, the half point move would raise the concern that the Fed had been behind the curve, but some might argue that if the Fed doesn't cut by 50 basis points, they'll be behind the curve. So the Fed sort of has to hopefully do what it thinks it needs to do for the economy, not always what's going to be for the momentary psychological needs of investors.
Now, what's the expectation for further rate cuts this year?
It looks like we're going to get right now. The markets are expecting quite a bit of cuts. So even though they're only right now pricing in a quarter point cut for September, they're expecting 100 basis points or 125 basis points this year. And there's only 3 meetings, including September. So there's probably an expectation that there'll be at least a 50 basis point cut somewhere along the way. That doesn't mean it's going to happen. I mean, the market at the end of last year was expecting 6 rate cuts. And then earlier this year, they were expecting no rate cuts. And so it can swing back and forth. But right now, there's the expectation of quite a bit of easing, before the end of the year.
And how did this spring and summer season without rate cuts affect the market and the broader economy?
Yeah, I mean, that had an impact. There's one reason why we had a spring correction it was because inflation came in, kept on getting sticky. It was not coming down. And so the rate cuts started getting priced out, priced out. It shifted mindsets because markets were rallying to start the year thinking, okay, we're going to get lots of rate cuts. And then it was like, oh, maybe not. So that definitely had an impact. Now, again, as the summer came in and treasury yields came down and the inflation started to cool, the market has priced that in. And that's part of the issue here is that when the Fed cuts rates, the market knows that rate cut is coming. So unless they surprise with the size of it, that may not move markets that much that day. A lot of the market move in the summer was on inflation's cooling, we're going to get rate cuts. And so that definitely has been a major driver of the markets this year.
And how should investors react to market volatility that may come with this upcoming rate cut announcement?
I mean, it's a little bit like an earnings report for the market. And so sometimes you just have to just sit back just a little bit, like not immediately move on it. And you just have to, because there can be some whipsaw action. There'll be the Fed, rate move, and then Fed Chief Powell will speak a little later. And so there can be some big moves back around, and sometimes the next day. So just take it aside. Don't try to immediately react to it so much. I mean, you can take some action if it, buying or selling as that seems appropriate, but just do it sort of very gradually because those things can move around. It's just definitely not. Can't expect 5 minutes after the Fed meeting. Okay, we've said it. We know what's going to happen. No, it could change 3 or 4 times over the next few hours.
Okay, Ed, we'll be watching. Thanks so much for joining me. This is IBD Explains. I'm Meredith Heyman. Thanks for watching IBD. We'll see you next time.